But Julie, over to you now with some breaking news on home sales and consumer confidence.
Yeah, let's get to consumer confidence first. It's coming in below expectations for April. This is the Conference Board's reading on consumer confidence is coming in at 107.3, 108.2 was what what economists had been expecting here. So worse than expected. This is sort of in line with some of the other numbers that we've been getting on this as of late. So it's been interesting. It's a slight decrease from what we saw in March, by the way, that April number, and the present situation index, how people are feeling right now, fell to 152.6. from 153.8. The expectations index, this is interesting, did tick higher to 77.2 from 76.7. So looking at the commentary from the senior director of economic indicators there at the Conference Board, she commented that the suggestion here is that the economy continued to expand in the early second quarter. Purchasing intentions, though, have fallen. So that's the consumer confidence numbers. Let's talk about new home sales for a moment. That number coming in a little bit below expectations. New home sales coming in at an annual pace of 763,000. That is quite a sharp decline from a revision higher the prior month to 835,000. So month over month, an 8.6% decrease. But again, that's because the number the prior month was revised pretty sharply higher here. So new home sales, as we like to remind you, is the smaller portion of the market. Existing home sales make up the bulk of sales in the U.S., but still watching that number closely to see if it starts to slow down as mortgage rates tick up, Soz.
Julie, interesting read there on consumer confidence. I think it really fits with the vibe I'm hearing on these earnings call this week, notably from PepsiCo and Coca-Cola. One of the biggest words or terms of the week, for me at least, is elasticity. You're really hearing Wall Street start to question consumer products companies on, hey, guys, how much can you continue to push through price increases before consumers just balk at this stuff?
Yes, it's a good question. And something else that's standing out to me in this is, how optimistic are people that they'll have a job and be able to pay for things? And there's actually a little bit less optimism, a slight bit less optimism about the jobs market. And this kind of ties into the conversation we were having with Sam Rowe late last week about whether we would start to see job openings decline a little bit, which is something that the Fed wants to have happen, a little bit of cooling of the job market. So 17.4% of consumers, according to the Conference Board, expect more jobs to be available in the months ahead. That's down from 17.6%. Again, it's a small move, but one that we should watch nonetheless. 18.9% anticipate fewer jobs to be available. That's an increase from 18%. So interesting and something to watch quite closely here when we look at these numbers. I also just quickly want to mention, Saz, while we're talking about economic data, we got durable goods orders earlier, and the number excluding various items that you want to keep an eye on is capital goods orders excluding defense, excluding air, rising by 1%. So that's an indication of capital spending plans and capital spending on the parts of companies. This is a backward-looking number. It's the March preliminary number, but still an improvement over some declines that we had seen in the prior months. So that's also an interesting number to watch.
I am not surprised, Julie. Our old friend Sam Rowe ahead of the story here on that jobs number.